So the internet is freaking out over Warren Buffett's perfect timing of the stock market, cashing out, sitting on a massive cash pile, selling the S&P before the correction, selling Apple before its sell-off, and basically timing the market on bonds. It was a magnificent play. But then again, if you do something for almost 50 plus years, you kind of get good at this stuff, right? We're not all going to be as experienced as Warren Buffett is. But that necessarily doesn't mean that we're heading for the R word, the recessionary word that a lot of people are throwing around. And there's not a lot of evidence for that. Today, we're going to be talking exactly what evidence there is of economical slowdown, what evidence there is not, what the true meaning of consumer strength is, and where the consumer is actually standing. And is there anything we should be worried about? Should this be a buying opportunity? And also quoting the man himself, when others are fearful, be greedy. When others are greedy, be fearful. And we have been in extreme fear for almost 2 weeks now. And the question is, are we going to get out of extreme fear heading into the FOMC this week? We also got the summary of economic projection this week, which is going to be very, very crucial. For all those that don't know what the summary of economic projection, it's basically a fancy way of saying what the hell the Fed is thinking and projecting into the future. Right now, they're expecting, in the last projection, it was basically 1 to 2 rate cuts this year. However, the market is pricing in a considerable amount of rate cuts going into the Fed's meeting. Right now, the consensus is sitting between 2 and 3, possibly 4 as of this time. However, this can drastically shift if we get more data, depending on what Jerome Powell says and also what they think. So this latest CPI report that came out this week was pretty darn good for the Fed. We're also going to be talking about a particular article in the debate section of the video where inflation is drastically going down now that everyone's bought everything at the bottom, right? Very coincidental how the narrative changes when BlackRock is buying, NVDA is going up, but yet they're telling you that a recession is coming. It's going to be very, very interesting. We're going to be discussing what we see in the markets this week, along with what happened this week, and let's start off with net speculative positions, as we always do, longing the market. So let's see. Big money is telling you sell everything, but yet they're buying. Let that sink in just for a second, and then understand why everyone is full of crap in this world. Then we got Michigan expectations and consumer expectations. The consumer is basically worried. Okay, we've been telling you guys this for 2 years, but the market kept chugging on. Also, here's a fun fact. We have a 10% correction every single year. Guess what? We just checked it off the box. Now we can actually rally pretty darn hard, especially because we're in an extreme amount of fear, right? When people come out of this fear mentality, the FOMO rally is going to be absolutely insane. And yes, you guys can guess which side am I on of the mentality of being bullish or bearish. Again, everyone can say the market's being irrational fears. The market's been irrational for years, for as long, last 3 years, a prime example of irrationality. But here's cold hard facts. It's the shortest recession to recession was 3 years. We haven't even got past that. So unless this is going to be the quickest, like, out of recession into recession time frame, that's going to break the mold of history. And the fastest sell-off while everyone's buying, again, I don't necessarily agree with that. But also we can look at the PPI that's going to roll into CPI, having a drastic drop this last week, along with CPI. And we'll dive a little bit more into this in the debate section of the video. But I want to talk about NVIDIA's latest news that's coming out. NVIDIA rallies as AI event looms. Is it going to be a buy the rumor, sell the news type of event? Or is it going to be, let's chug higher on NVIDIA, considering it had a massive week? We only closed approximately 20 cents below a new weekly high. So we're setting up the chart to be very, very nice for that bullish event on Monday. However, there's a large opportunity to short this thing if this thing falls back down below this level. If we get a breakout of the weekly level and fall back below it, there's definitely going to be a lot of short interest in this. And we got a couple gaps on the chart to fill right here. So again, NVIDIA is going to be one of those highly watched stocks this week. But let's talk about exactly what we need to look on the market, what happened in the market. We are still below the 200-day. That's very bad. However, the weekly range is a little bit tighter, right? We got 1.3% to the upside, approximately 2.2% to the downside. So if we're looking to play which side of the chair I want to be on, considering we're in extreme fear, we're starting to tackle this downtrend that we've had here. I'd definitely be looking to be betting on the bullish side of the market. Again, I was saying the same thing when we were around the 200, and then subsequently we just blump right through it. So I I was obviously wrong. I'm willing to admit when I'm obviously wrong. Right now, we want to get back above 572 on the S&P. We need to get back up there in a hurry. Again, this massive sell-off was generated by essentially news of a recessionary fears. And coincidentally, we have Atlanta Fed GDP coming out on Monday at 1 o'clock. So could that print be we made a mistake, the government's screwing up like it never does ever? But again, looking at that 569.54 break, really coming down to that 200-day moving average at 572.55, that's where I really would get bullish on the market and be waiting for that break above that level, considering it gives you a very solid positioning to, number one, you can add more into that position at that point. You can then be certain that you're not buying into basically a pump and dump, because if you break below the 200 again, fail to close above it, you essentially say, okay, cut the position, 0.5% loss, very minimal loss for you. Right now, I would advise a wait and see approach. If we blow out the low, then there is definitely a short opportunity, because there is pretty much no support between here and 464. So we're not going to talk about that situation just yet, because I don't want to entertain the bearish approach, especially with the large amount of volume that we're having here. It's looking more like a capitulation rally or fall, right? As we see on the weekly, massive volume. We want to see the volume calm down this week while price advances. That is going to be the thing that I'm going to be crucially looking for on the S&P. Now let's dive into the NASDAQ, and then we'll get into the famous Russell trade that I've been talking about for all knows well. Similar story to the S&P as the NASDAQ. Looking again, bigger opportunity on tech, right? We have approximately 2.8%. We could cover that in one day. We just did that recently, massive 2.42%. So we could definitely be back above the 200 in a single day. We also have Powell. Powell has known to kick off some of the craziest sell-offs and also the craziest rallies in history. So are we setting up for a massive thing with Powell? Again, AI, NVDA, everyone's buying AI companies before that event. Maybe they know something we don't. But anyway, don't want to bore you with that. 483.97 is the line in the sand for the NASDAQ. 466.43 is going to be the line in the sand for the downturn. And subsequently looking at 449, if we do break through that 470 level, we really don't want to come back and fill this gap in any way, shape, or form that we left on the S&P or the NASDAQ. We want to see advancement on Monday. We want to see further price appreciation. We want to see that bull rallying, as we're seeing a lot more net speculative positions going long, right? We're not seeing a lot of people go short. This was just a pure sell, and then everyone's buying up the markets while everyone's telling you the market's going to fall off a cliff. Again, keep that in mind of how that narrative can be played out and how the FOMO could result in higher profitability for all of you. But going back to what I was saying, we want to get back above that 200-day moving average. Really, the NASDAQ is going to be a little more of that riskier play, because we're going to probably initiate bullish positions around that 483.97 number, which is where we need to get back above. Get back above that, then we're looking at that 200 retest and how the market reacts around it. I can't tell you how it's going to react around it. I can only tell you that it's going to be a very crucial point. We have to then see and judge for ourselves once we get back up there. And then subsequently, I do believe the rally from the 200 to the 50 is going to be a very quick one. I don't suspect we're going to see a lot of chop in between there, as a lot of people are saying. Next, moving on to the Russell. This is where things got really sketchy. The red line is the bear market line. So the Russell would officially at 196 be entering a bear market. Subsequently, we came within 0.5% of striking distance of said red line and the bounce off the 200. So this is where I'm expecting Powell to kick off one of those massive rallies in the Russell. I think it's the most underrated trade this year. I think the Russell is going to do 7% on Powell. We'll see how that all turns out, because 7% on a single day, let's say we're just at the weekly level, would put us right back above 220. The Russell has done crazier things. Everyone's probably looking at me like a crazy person right now, saying the Russell is going to do 7% in one day. I have seen it myself do some crazy percentages. Also, again, Russell, more compounded coil, so we could see some consolidation before it rallies into Powell. Again, big accumulation phase. I was buying this in my 401k at work position, because I was like, okay, this is just stupid. I'm getting 20% discount on the Russell. I am taking it because I most likely think the Russell's going to do some crazy percentage this year, and it's probably going to be the NVDA trade of the century. So keep an eye on the Russell, look above 204, and then a straight line up, right? This was very low volume, or basically distribution of volume through this area. So a break above 204 is going to have very easy, little to no resistance going up to that 200. And wouldn't it be funny that we just barely avoid a deck cross on the Russell and the indexes and NVIDIA and Microsoft? for essentially right before the bottom fell out. That would be a story to tell in the future, but then again, keep an eye on this, guys. Keep an eye on that 204 number, the 197 number for blowing out the low, entering that 196 number bear market. That's where we're really going to be looking at for this. And last but not least, let's talk about the VIX. The VIX came right, again, similar to the Russell. Very coincidental, right? That we came right to the tipping point where everything starts breaking the 30 magical number and started to sell off. I foresee the VIX going back down towards the $17 or $16 area, especially if Powell kicks off something that could be magical this week for the bulls. Again, everyone's buying this stuff. Everyone's going into Bitcoin, right? We talked about Bitcoin having one of those big falls, right? Fell off, hit the bottom around that 200-day moving average, got a nice bounce, want to see above 85K. That would signify the next target is going to be that dominant downtrend that we saw, and then tackling 95K. We'll keep you guys updated about Bitcoin, but this is going to be the one to watch. It's going to be the VIX continuing to sell off. We're going to see which of the indexes are going to break out first. My money is on the Russell this week just because of how badly it got slapped, and then followed by the NASDAQ and the S&P. And we're also going to keep an eye on Bitcoin to know if the risk on asset is the one to be watching. 85,000 is the breakout point for it, and subsequently below the 200-day moving average is the breakdown point for Bitcoin. So make sure you guys keep an eye on that. And a lot of these mega cap stocks like Microsoft, right? Finally having a bullish hollow week. Subsequently, really discounted in this area. Again, I think next tech earnings, this is definitely going to be an area to be buying tech because their earnings are going to absolutely blow out. 20-30% runs on these tech companies probably on their next earnings, because you have sold them off so drastically. Let's just take a look at Apple, right? For all those Apple fans out there, you just plummeted Apple. It was holding up, then you just sent it down lower, not even a high volume. And that is very suspicious, meaning we can get very back quickly on Apple. I could easily see Apple back at 250 before its latest earnings in April. So again, excellent time to buy these companies. Everyone was screaming bloody murder about not getting a discount on this. We also saw like SCHD quickly reversing back above its 200-day moving average. So having a nice area there. RSP, same story. The broader market catching a big bounce. So again, it's one of those questions of how is this week going to play out? We're going to be looking at the weekly levels. Again, we've had 3 weeks of complete selling, extreme fear. So you guys are going to see in the biggest winners and losers that Fatal is going to give you now about which companies are really discounted and what you can add to the buying list this week. So take it away.
So we have had an insane week in the markets. In fact, guys, we have kind of recovered a little bit as of Friday. We can see that on the 5-day, the market fell almost 1% at 0.93%. And on Friday alone, it gained a whopping 2.13%, ending the day at 5,638 or almost 5,639 points on the S&P 500. Taking a look at this past week's dividend hikes, we are starting off March 10th with Oracle hiking dividend by 25% to 50 cents per share. Korn Ferry with a 30% hike dividend. We got Dick's Sporting Goods hikes dividend by 10%. We also got a dividend cut on, I believe, March 11th, which was Kohl's, cuts dividend by 75% from 50 cents down to 12.5 cents. On the European side, we got Rain Metal raises its 2024 dividend by 42%. Realty Income hikes dividend by 0.2%. The company Guarantee Bank Shares hikes dividend by 4.2%. We in Precious Metals Corp raises its quarterly dividend by 6.5%. WP Carey Inc. will raise its quarterly dividends by 1.1%. UDR will raise its quarterly dividends by 1.2%. And TE Connectivity hikes dividend by 9.2%. Now, if we take a look at the heat map on the week, we can see that there is a lot of red, even though on the 1 day, if we just switch really quickly, this is everything's an emerald, right? On the 1 week, though, we still have a whole lot of red. Now, if we take a look at the technology sector, we got the worst performer here being the company Adobe, losing 12.16%, and the best performer, it is Intel, gaining 16.52%. Into another consumer cyclicals, as you guys can see, this is a ruby. Almost none of them game, only 3 of them actually were in the green. Overall, though, the worst performer was Expedia, losing 12.05%. 2%. And the best performer, there were only 3 that gained, and that was the company GM gaining 1.9%. The consumer defensives aren't bearing any good either, and we can see here that the worst performer was the company Estee Lauder, losing 9.26%, and the best performer seems to be the company Altria Group, gaining 1.94%. In the financials, we got a whole lot of red as well. However, the insurance actually were in the green, as well as the insurance diversified were also in the green. Nonetheless, though, the worst performer seems to be none other than the company T. Rowe Price, losing 7.57%. And if you guys remember, I did do a discounted free cash flow on this one, and I noticed that they are not too good anymore. They've been losing assets under management for quite some time now. So the fact that this price is down 7.5%, almost 6%, is very telling. Overall, though, the best performer was the company Cincinnati Financial Corp, gaining 3.88%. But I also have to mention Berkshire Hathaway, gaining 3.83%. Looking at the communications, we can see that all of them lost, all except for one company. Now, the worst performer was the company Warner Bros. Discovery, losing 7.95%. However, the best performer was Netflix, gaining 3.02%. But basically anywhere here, you guys just, it was very, very bad. But honestly, companies like Google, $167.62, it does seem like a pretty good bargain right now. Into now the healthcare sector. The worst performer here was the company Dexcom Inc., losing 9.19%, and the best performer, it is the company Vertex Pharmaceuticals, gaining 3.38%. Looking into now the industrials, we got the worst performer being the company Delta Airlines, losing 12.26%, and the best performer, ironically enough, it is in the exact same industry, and that is Southwest Airlines, gaining 8.66%. Looking at the real estate sector, the worst performer was Host Hotels and Resorts, losing 8.7%, and the best performer was actually CCI, gaining 5.62%. This thing has been over the ringer, guys. I mean, this company has been, as you guys can see by that graph, it's been very, very low. However, we are actually above now $100 one more time. Love to see it, especially since I do own quite some of this, and this is my worst performer right now. Into now the energy sector. This is a very good emerald, as we can see right here. Nonetheless, though, the worst performer was Texas Pacific Land Corporation, losing 3.9%, and the best performer was ConocoPhillips, gaining 9.18%. Looking now into the utilities, once again, a really nice emerald over here. We got the worst performer being Southern Company, losing 1.12%, and the best performer, by the looks of it, it is the company, it is Vistra, gaining 8.87%. And lastly, in the basic materials, the worst performer here was none other than the company Eastman Chemicals, losing 7.8%, and the best performer, it is none other than Newmont Corporation, gaining 5.4%. Now you guys can't see that, but it is Newmont Corporation gaining 5.4%. And now looking at this week's upcoming earnings, on Monday we got companies like 360 Finance, High Tide, Fibrogen, and a lot more. Tuesday we got Sundial, Stone, Xpeng, and a lot more. On Wednesday, we got Five Below, we got General Mills, we got Gold Royalty, and a lot more. Actually, Ollie's as well on this day. And on Thursday, this is by far the biggest day, we got Micron, Nike, FedEx. Really, really good day right there. And lastly, on Friday, we got Neo, Carnival Corporation, Mini, and what is that? So good. It is what it is. So that pretty much does it, guys, for this segment. With that said, take it away, Mike.
So the internet is going a little crazy for Warren Buffett selling out at the perfect time, but it's also coincidental that the same person that told you to buy Extreme Fear, everyone's quoting as like the end of the world. And just to take a second to step back, recessions don't just magically come out of nowhere like everyone's pretending they are right now. And it's just insane to me how everyone's like so hell-bent on a recession is coming, yet a lot of the big money is buying the market. So where do you think we're going from here, especially with Powell on deck this week?
So a few things right there. You're absolutely correct, right? I mean, Well, I mean, sure, he timed it fine, but I would actually argue that we've been in a recession this whole time. I mean, I know for a fact all over X, people have been pointing out that we've been in a recession since 2020, 2021. It's just that they masked it. Remember when we hit two negative GDP
Yeah.
prints back in 2021 or 2022? And then they were like, oh no, but it doesn't really mean that. And it's just like, come on, really? So I would actually argue that we've been in a recession for a long time. It's just that, as we clearly stated here on the channel before, that once DJT became president, right, then all the numbers are going to come out to be real. Like
Yeah.
all the actual numbers are going to come out. And we actually got some pushback on that. And I think now we're being proven right.
Yeah,
So
and it's also like how, if that's theory is true, right? Like with the bond market and everything, you're basically coming out of it now, right? Like if you can't stay in a recession that long, prolonged, right? So if you assume that 2022 was the start of it and a 3-4 year recession, right? You're basically at rock bottom. Like the ability for you to go anywhere from down further is very, very limited. And I find it very peculiar how the narrative went from like everything's going to be a recession to maybe it's like, I don't know if you've noticed, they started putting out articles on Friday of like, well, maybe a recession's not coming, right? Coincidentally,
right.
after they bought everyone's stuff.
So that's the thing, and we're gonna get a lot of pushback just for me saying that, because people are like, "What are you talking about? A recession back in like back since 2022? The market has been up. The market is not the economy. Yeah. That's what a lot of people tend to conflate." And it actually comes back to what you just said right there, because, oh, well, we're not getting a recession now. The only reason why you're saying that, or why people are saying that, is because the markets were massively in the green on Friday. Yeah. But if you take a look at this on the 1 week performance, there's still a whole lot of red. So this idea that, oh no, now we're no longer going to get a recession because markets are green now, or we are going to get a recession because markets are red, it's just like, that's not what a recession is. Yeah. Like, the definition of a recession has nothing to do with the stock market. It doesn't. It's two negative GDP prints and 2 consecutive GDP prints per quarter, like consecutively.
Yeah. And the
stock market being red, down 10% just means a correction. The stock market being down 20% or more, it's a bear market, not a recession still. You could have a bear market while not having a recession. The two things doesn't necessarily need to line up perfectly. They do usually, but
yeah, they're
not
tied.
Necessarily one-to-one.
Yeah, and it's like everyone's freaking out, right? Like market this week, this candle is technically possibly a reversal candle, but I also want to point out, like VIX didn't even cross the 30 threshold, right? You're not even into the craziness, right? Like everyone's acting like the world is ending right now. Like if you were actually in a like plunging into a recession, right? I use that term very crucially. Do you think the 10-year would still be like flat on the week? The 10-year would be the yield would be like rock bottom zero because the Federal Reserve's cutting rates tomorrow, right?
That's
so
true.
Like
that's true.
You had you have consolidation in the 10-year right now, which is kind of interesting. We'll get into the discussion of where we see Powell going. We got the projection this week, how things are all going to shape out, right? Financials absolutely got slaughtered, but it was very interesting on Friday how like chips were getting bid back up and everything, especially with the NVDA event on Monday, right? So NVIDIA's coming out.
NVIDIA ended the week almost up 8%.
Yeah.
So
the weekly candle was great, right? NVIDIA nearly wiped out all the losses previously and was up 7.97. Well, American Standard will round up to 8%. But what I really want to talk about is the going into this GDP print that is not the official print. People misconstrue this. The Atlanta Fed is not the BLS print, but it is the one that forecasts kind of where things could be going. Mm-hmm. Previously they reported 2.4, right? So they went from positive like 2 something to negative 2.8, right? So first, you guys are horrible at math. And then second of all, it's like now watch this number be like, let's say -1, right? Let's see how far they revise it upward, or do they revise it further downward and freak the hell out of the market? But
right.
We also are seeing like with the job numbers and everything that's coming out, we're not seeing that classical like economical degradation that we saw like in .com, right? Like you kind of see these things coming where it's like the job number goes from like 150 to 100 to 90 to 50 to negative numbers, right? When you start hitting those negative numbers, everyone's then freaking out. Everyone right now, it's like, well, you gotta have an okay number. And then it's like, oh my God, it missed it by 1,000ths of a job number. Then the end of the world's here. And I'm just like, explain to me how you guys like didn't believe this number for like 2.5 years, but magically now the number actually matters. And like I still think they're gonna fudge with this Atlanta Fed GDP number just because I have my theory that this was just a scare tactic to get everyone to sell the bags to the big hedge fund managers so that they can go to their clients at the end of the year and say, look how wonderful we did. That's just my running theory right now, considering how sharp the downturn was. Like there was this is a V-shaped move, right? History teaches us these moves come back within a month because they're so violent to the downside, especially like the 1972 crash was a 38% drop in the stock market in one day. This was before circuit breakers were a thing. This is also why circuit breakers became a thing. It was the flash crash, the first ever. And then subsequently, 2 weeks later, it was right back to all-time highs. So again...
And that's also something I also want to mention is that 3 years ago when we had the negative GDP print for 2 consecutive quarters, we didn't consider it a recession, but yet now we are. It's just
now you get a forward-looking print, right? Not even you don't even get the actual print, right? The BLS number, it doesn't come out till end of April. End of April is when the first preliminary for Q1 is going to be printed. And then like you got Besson and all of them basically now like the articles are like, well, maybe we'll just get by with like zero growth this quarter. Well, zero growth is not a recession. Number two, it's not a negative print of a quarter. Number three, that means you have to wait all the way to September to figure out if you're in a recession.
Also, let's think about this as well. The majority of these quote unquote negative GDP prints is because of the fact that they're slashing government jobs, which is a good thing because government doesn't do. They don't provide anything for the economy. In fact, one of the reasons, or at least one of the main factors that we were worried about and that we were calling out, even Bloomberg was calling out last year, was every single time we got a job numbers, it was the government payrolls that were swinging all the jobs like to the upside.
Yeah.
And it's just like that's not sustainable because government doesn't make anything.
Which is funny. You bring it up, right? So we're supposed to see this government layoffs now, but yet everything's being offset, right? So the government payrolls do this, but manufacturing payrolls that have been like slaughtered for the last 12, 13 months in a row are going up like parabolic. I'm like, you could not see a sub 100K print this year possibly, depending on how fervent the manufacturing payrolls are going to increase. And also we're going to get retail sales this week on Monday, right? Pre-market open. We're going to get business inventories, housing data along this week. And mortgage applications are going through the roof right now with yields falling off, right? As we've said multiple times on this channel, the second those rates come down a little bit, we're getting a massive, massive bump in housing. We're also going to get building permits, housing starts on Tuesday. Again, Atlanta Fed GDP at 115 on Tuesday. It's very coincidental how leading up to the Fed, how much you want to wager? Jerome Powell was calling the Atlanta Fed off the hook when he heard that number come out.
Negative 2.4?
Yeah, he was probably calling him, cussing them out like no tomorrow. He was like, you're canceling my dang soft landing. How dare you?
So I'm a little bit afraid of what you just said there with mortgage rates increasing because that would mean that the housing supply... Mortgage applications are going up, which means that the housing supply is probably decreasing a whole lot, which means that we're probably going to get the median or the average housing costs to go up as well. And right now, I think it's like around 430,000. That's not good.
Yeah, it depends also, right? Because like it was a clickbait title as well, right, for the article. Remember, if you can't say the consumer's strapped for cash and then has money to buy a house because it's still, even though you're like, if you do FHA or anything, it still requires a down payment. So if they can't afford anything like day to day, like strapped for cash, obviously they've burned through all their spending. So they necessarily can't go and get this down payment on a house. So it's going to be like which scenario is true, right? Is the consumer strong and healthy and can ramp up home prices and then sustain that, or is it basically you have a weak consumer and thus can't have this massive boom in housing? Especially, we're going to see the data, right? Like we've talked about how we need to look at the data. The data is not indicating anything one way or another. It's also going to be the first housing print outside the seasonality window that we see this like lull in January and February. So let's see how February turns out, and then we'll go from there. But the big kahuna, besides NVIDIA on Monday, is going to be Jerome Powell himself and the SEP, which is the creme de la creme of the week, right? Their 1 year projection is 3.9 previously. And that's what we really want to see, what the 3.9 is going to come in at, or more or less. I think it's either going to come in flat, 3.9, or they're going to go down to maybe one extra rate cut, which I would interpret the market taking that as a very bullish thing, considering the latest inflation data that we got was very, very, very sound. Also, we're going to see the next inflation data with oil prices and everything. And I don't know if you heard about what I think futures for crude are going to open up very red today because of what's going on in the Red Sea.
I have no idea what's going on in the Red Sea.
So Trump basically bombed the Houthis out of existence this morning by basically bombing precision bombs all over their critical infrastructure.
Did that happen? I wasn't aware.
So he basically, you know how like in 2016 he went after ISIS? Okay, replace ISIS with the Houthis basically now. He's trying to make them be gone from existence. But yeah, they dropped a crap ton of bombs.
Okay,
anyway,
I was not aware of this.
To make a long story short, the reason that's important for crude prices and that why this is very, very bearish for crude prices is because a lot of ships were going around the Horn of Africa in order to go deliver goods, which is anti-inflationary. When they are able to go through the Red Sea because it cuts down on fuel prices, which therefore they spend less transporting goods, which therefore goes to the consumer, essentially transferring that cost. So now they're basically going, a lot of people are expecting oil prices the demand is going to decrease while the supply remaining the same, and Trump trying to do drill baby drill. We could see, maybe, possibly, crude prices hitting a new low this week, which would be very, very good for inflation, and Jerome Powell will be probably rubbing his hands together, being very, very happy with that, especially since crude prices this week actually found support right on that magical bounce point that we talked about. So now the question is, can they break through $66 a barrel?
Okay, so I just pulled up the map of the Red Sea because I don't really know that geography right there, and I see what you mean by that. But isn't that where the Suez Canal was back in? That's where the Suez Canal was.
Yeah, Suez Canal is up by Egypt.
Yes, it is.
So basically, the
right
Houthis have been
Cairo.
Firing on any American ship for the last 2 years. So some captains won't even go through that region now. They're so terrified of getting boarded or having their vessel captured or being bombarded that they've been avoiding these regions. So now with Trump deploying a carrier group there to basically clean the mess up, allows these ships to now transit through that area, getting their goods quicker from Asia over to Europe and also to America, right? If they're going through the East Coast versus going over the Horn of Africa, which less fuel costs, right? They're spending billions of dollars in additional fuel costs, which is driving up the tight oil supply that has been in the world. And thus oil could be definitely opening up a little bit red, which is very good for the inflation numbers, considering energy is probably like the biggest driver of everything because it translates into other categories as well.
Everything else, But, okay, so and the fact that we're still in March, that means that the March numbers are probably going to come in. Oh man, the March numbers may even come in sub 2% at this rate.
Right? They're going to crater.
Yeah.
But do you think we're going to get, how many more rate cuts do you think we're going to get based on the projection, right? Are they going to change their projection? They're going to stay like cautious, or are we going to see an argument, right? Where the Fed starts, like members are starting to argue, like a pool of them argues for the current, and then a pool of them argues for more severe rate cuts.
We might still get, we might get more to saying that we should begin to cut, but I think we're gonna need like 1 or 2 more months of data
Of
in
good
order
data,
to make
right?
that decision.
And I
Yeah.
think he's going to come out, right? Like we've seen Powell do this before, where he's going to come out and basically say, this is really good data. We want to see more of it, right? Like talking
Right.
up the data because and right now he's like probably looking at the Fed Atlanta and being like, don't you dare, don't you dare
Right.
ruin my soft landing. Because that's what he cares about. He cares about his place in history more than anything.
Right.
So,
So we'll see what happens with that one, but it's looking good. It honestly is looking really, really good.
yeah. And then we got also the job numbers on Thursday. And then Friday, we kind of have nothing, really. So it's going to be like a jam pack. Whatever happens to the first 3 days of the week is going to be the most crucial going into the FOMC. It's going to be violent like no tomorrow because it's always the FOMC and the market's on pins and needles. And
Yep.
who knows what can happen between then and now because the world is a very spicy place right now. So, do you want? Well, we'll finish with the classical. Where on earth is this thing gonna be at the end of the week?
I mean,
Because
we have
hey,
been.
hey, we're playing Fear and Greed bingo at this point. We're missing 16 and 18, right? We got 13, we got 14, 15, 17, 20, 21, 18. We're missing 17 and like 19.
We have been at extreme fear for quite some time now. Hopefully, it remains this way. But
Bloody weeks.
yeah.
2 weeks.
Here's the thing, though. Here's the thing, and man, I've been getting into arguments, I guess you could say, with our comment section and with people on X and all that stuff. People are just like, oh no, now it's not a good time to buy because the market's just gonna keep getting lower. And and even like in our personal
hold
group.
on. I cannot wait to make a rant video of I told you to buy and you were all idiots. I'm like, I'm going to make that 20-minute rant video when mark my words. Powell has the capability to launch us into an extreme greed. And I mean, stay there for a while, right? We've seen where markets can basically stay in extreme greed and do some really funky stuff. AKA 2023. Light switch. Anyone remember that comment?
Yeah. I mean, even in our personal chats, we know one of our friends, he's just like, nope, things are still, things will fall more, And I'm just like, this is why I'm just, hey man, when you start to get these kinds, like when you get what we just got these past few weeks,
You buy like
this is
tomorrow.
this is not a time where it's just like, just a few more dollars. No, like this, there's no difference between 300 and 302. That's why I'm like, Costco falls from 1,078 down to 920. I bought, and then it falls again to like 888 or 890. I'm like, I bought again, and then you have people in my comment section being like, oh no, it needs to fall more. I'm just like, and if it doesn't, like you just missed the opportunity. Hello,
I love how people quote Buffett, but won't listen to his other advice. I'm like, I'm having brain aneurysms listening to these people of like, oh no, Buffett timed it perfectly. He's also the guy that preaches don't time the market, is time in the market, dollar cost average down, buy good cash flowing companies, and he's the most famous investor for saying, when others are fearful, be greedy.
right.
He's known for that quote.
Right.
I mean,
So-
and the other thing, it's like he's also known for the stock market's transfer of wealth from the impatient to the patient. Those that were patient to buy the dip, aka here's your dip.
Yeah, here's a small dip. I hope that we get more red this week, but honestly, if we don't, I would not be surprised. And I personally did buy a few. I obviously, like, I'm not buying a whole lot for reasons, but if we do go up from here, I would not be surprised. I'd be like, y'all should have bought. Y'all should have bought. Y'all should have bought. I mean, there's nothing else,
Oh yeah,
sucks. But
and the thing is, like, you've been here so long, right? So the market's trading at extremes. Everyone on like the option side is getting loaded on puts. Market makers don't want to pay these out, so they have an incentive to basically run the market back up, eliminating all these puts expiring outside of the money, and basically collecting all that premium, right? Everyone was so like call sided right down here, right? Because we were trading in very, very lows, but then they just ran it right back up, right? You paid extreme premiums for these puts, and now they want to expire them worthless. And what's better than Powell coming out and basically just out of the money,
whoever
all your puts?
if people bought puts and the market skyrockets this week, there's gonna be a lot of people that are gonna be losing a whole lot of money.
And then they're going to FOMO into the market, right?
Like,
So they're going to lose money, they're
right.
going to lose their premium, and they're going to FOMO into the market because they're going to
Right.
go through an emotional roller coaster.
Right. Whereas this is what we preach here, at least what I preach here from an investing standpoint, it is buy low or buy at valuation, buy at valuation, and when things fall, buy more.
Yeah.
Assuming that the company's fundamentals remain the same.
Yeah, it's like safe haven demand crater back to July. VIX did a spike like when the carry trade was unraveling, and then when all this stuff was going on in December. We're at the extremes of put the call ratio, stock breadth, which is basically the broader market's breadth. We're basically cratering to December 23rd and past July. So extreme weakness, and then we got stock price strength. Like everything's cratering, and everyone's thinking, no, it can keep going, right? It's like when you initiate a short position after the stock's down 10%, and you think, oh, no, it'll go another 10%. And then you're surprised when it goes all the way back up.
Right.
So it's going to be very interesting. Remember, Jerome Powell loves his soft landing. So whatever is going to get in his way of the soft landing, he's going to come with a reckoning. And with that, guys, check out the latest video we did over here for you guys linked as well. Also join the Discord linked on the left-hand side here. Thank you all so much for watching, and we'll hope to see you guys in the next one.